What's going on, everyone? Very short trading day for me today. So there was a couple of scenarios and levels that I was looking at. If you guys watched my video from yesterday, actually played out perfectly. There was two sides to the trade. So we were looking for the short position, which was going to be below or not yesterday, but Friday's low. So if we broke below during London session, if we broke below Friday's lows, what we were looking for was off the open, a little bit of a spike, and then we were looking for a rejection coming to the top of the hour and then looking for a follow through. That did not happen. So we could now eliminate that from the equation, which tells us we need to be looking towards the other side of the trade, which was a long-sided trade. Now, this long-sided trade was going to happen in one of two ways. You either ignore the initial pop, wait for some type of pullback, and then try to get it on the pullback, or you wait for it to break either London high, pre-market high, whatever level you want to use. Maybe you've got a moving average, maybe you've got the linear regressions like I do. Wait for it to get into that level, wait for it to confirm that level, and then take the confirmation. So let me explain to you exactly what I'm talking about. So inside of Evolution Traders, in my course, I teach the opening drive setup. I'll give you the very basics. What we're looking for is distribution. We're looking for a very defined level in the London session. And then we're looking for a gap. We're looking for space to target into the next supply zone. That's all we're looking for. Today set up very perfectly. So what I was looking at coming into the market open today was, if this was going to spike and this was going to be a bull trap, right, where, you know, maybe we pop for 5, 10, 15 minutes and then aggressively pull all the way back down and start running lows, then either A, you were only going to make a little bit of money on your quick scalp, or you would have had to adjust your bias to go to short if that was going to happen. Luckily today we got some follow through. Essentially, you could have bought at the market open and sold at the market close, right? In a perfect world. I don't think any of us did that. Again, you know, in a perfect world, which we don't live in a perfect world. So we have to take, our treats where we get them. Okay. So what I was looking at coming into the market open today is August the 4th. I was looking at, a lot of consolidation during London, looking at this swing high, and right leading into the New York Open today, we kind of broke that consolidation, right? So again, this is a consolidation I'm talking about, right? You see, there's very clear level here where price action was just kind of, really doing nothing. And then if you kind of look at the 5 minutes leading into the New York Open here, we break, right? We actually break those highs. So one thing that I was keeping my eye on here was this white line. This is my linear regression, channel 50, right? So again, linear regression, channel 50. That's what I was looking at coming into the market open. What I wanted to see and what I was going to take me off of the long position would have been if we broke over that level and then we failed to confirm it, meaning it wicks over and then closes back below. That would be a strong sign that we need to be looking short. But in fact, the first 5 minute candle of the day, I always recommend staying off of the first 5 minute candle of the day. Like, if you can avoid it, stay away from the first 5 minutes. It's just, the range is too big. Even if you're right on the right side of the move, you're going to get smacked with volatility if it's chopping around 15, 20 points inside that 5 minute candle. Wait for it to close. And then now that it's closed over our linear regression, well, we're clearly above this London high swing here. Now we're waiting for the confirmation, and the confirmation is going to come on a following candle. And I just put myself into this candle here, 5 minutes off the open, and we take it for a little bit of a ride. Now, I didn't make a tremendous amount of money today. It's not like I made $10,000 today, but I made about 400 bucks, right? And for me, making $400 a day on a funded account is more than enough. And it came inside of 2 trades. So the first trade, my money was placed here, and I took about 200, and I don't know, it was like 220, 215 bucks. And the next trade came after the 15-minute ORB. So 5, 10, 15 minutes. What I like to do is, once the 15 minutes is set, I like to mark it out. Okay, I like to mark it out. And the way that I play the 15-minute ORB is, I like that ORB to get broken. Okay, same thing, allow it to break, put in a new high, and I like to see that new high get confirmed. And again, a lot of my scalps are between 5 and 10 points. They're between 10 and 15 points, depending on the speed of the price action. So when the range is smaller later on in the day, I'm probably looking for something close to 5 points. Unless it's a specific day where I'm going to put on more size and take that same 5 to 6, 5 to 7 points. You know, if I put on 1 mini, 2 mini contracts and I take 5 points, that's $100, $200. Again, I don't like to do that often. A lot of the times I like to be in that sweet spot of trading between 5 micros and 1 mini contract, or 10 micros, all the way up in that range, so I can scale in and out and kind of hold for a little bit more. But the second trade, that 15-minute ORB, was set, and then you wait for that following candle to get confirmed, right? So if you look at the first trade here, we break and close over the linear regression. That price was sitting at 21,130. We confirm it. It goes all the way up to 173. Okay, I mean, you're talking about a 46-point range candle. And when you're looking for, especially this early in the morning because of the volatility, when you're only looking for 10 points, 12 points, 15 points, 5 points, that comes very, very quickly, a lot of times in a blink of an eye. So, you know, I was able to scrape just a tad hair over 10 points on that trade. And then we get this next trade here. After the 15-minute opening range, it's set. This candle right here was a 37-point range. So from confirming the 15-minute ORB, 23,197. So this is where your ORB gets set. You're waiting for price action to break it. This is a 37-point range candle. Now that it's broken the 15-minute ORB, your entry price now becomes when price action confirms. Okay, when it confirms that new pivot. And this candle here was a 46-point range. So if you just look at it, the high price here, 23,227, drops down to 211, right? You're looking at about, at one point in time, you know, 10, 14 points worth of drawdown, and then shoots up to a price of 257 from an entry price of 227. So again, tossing a lot of numbers around, but just stick with me. Entry price over 227. By the time you enter on that same 5-minute candle that you enter, it goes all the way up to 257. So you're talking about 30 points. Okay, so big moves there to be made. You know, I think I logged in over 25 points there. Again, you know, over 20 points on essentially a mini contract between those two trades. And that's enough, right? Like, that's enough for me. I'm not looking to trade all day after that. I'm not looking to turn around and go short. I'm not looking to, you know, see if I can get all the way to the next supply zone. But this plan was laid out yesterday. It was laid out inside of my community. I also gave a little bit of a snippet on YouTube yesterday, but the potential landing zone was all the way up here at 300s, right? 300s. And then even towards the end of the day, me and some of the guys were just sitting around watching the charts, and we said, you know what, wouldn't be surprised if this touches 350. And look at exactly where we close, right here into the close at 340. So, you know, following these linear regression channels, using your 20 SMA on your smaller time frames to give you bias and to give you like a trailing stop loss works. Looking at the London high, London low, looking at the previous trade day high, previous trade day low, gives you a good analysis where you can put your money at and where you can try to make some cash. So with that being said, I hope you guys enjoy the video. If you want to join Evolution Traders, that link is down in the description box below. I'm always taking on new traders if you're willing to learn, willing to put in the work. Also, Apex is 80% off. You guys can use code DAnthony. I will see all of you guys on the next video.